What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to do a quick video on IVR. I was saying, in the comment section, I'm not going to post a video. I'm actually going to do a quick speed run on IVR. I'm going to compare it against NLY and AGNC and why I like it real quick. I'm going to do a dividend stock analysis on IVR. So right now it kind of appears to be a yield trap. But I bought the dip, and I'm going to explain to you why. I'm going to hold these guys, maybe buy more, and it's a very popular dividend stock, so I'll just go over that. Again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I feel very confident in this one. And this is a risk stock. This is a very risky dividend stock, especially with the M rate and the way the trends have gone with this. So you got to be careful with this one. This is a little bit of my play money that I'm just throwing in, left over from my E-Trade money, like when I'm buying dividend stocks. So this is why I'm just loading up in these guys and buying and holding. So let's check this out right now. So this is definitely my risk stock. It's sitting at 281, less than $5, and this is Invesco Mortgage Capital. Sitting at 280, its day range is 274 to 282. It was 263 to 460. Market cap 875.99 million US dollars. The volume is 5.90 million. The PE ratio is 8.69. Its dividend yield is 12.81%. So at one point, it was kind of in line with the S&P. It was at 1781. Took a huge dip. I mean, what was the lowest? It was at 195. And now it's 281. So it cracked 336. One point it was 483. So there is some life in these guys. So that's one thing to consider. I'll show you their revenue real quick. So I want to just show you some trends with their earning calls. They beat it by 8.03%, 8.11%, the 8.11% for the EPS it met, and it beat fourth quarter in 2020 of 42.86. It beat that 19.74. So I'm seeing beat or met. That is attractive to me. I mean, you're seeing it with the trend, so that's good. They're making revenue. Let's go over their overall revenue real quick. Look, at one point, this is in millions US dollars. 687, 650, 478, 545, 643, 778, and then 280, which is like a huge nosedive. I mean, man, that was a hit. And that's because of the pandemic. So, you can blame the pandemic for these guys taking a huge hit. So it's going to take a long time to rebound, maybe 4 or 5 years to get back to its price. I mean, that could be. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. But I'm going to go over, okay, their revenue trends were up before the pandemic hit, which makes these guys very promising, an attractive dividend stock, high yield dividend stock. But still, there's a huge risk with that. And I'm going to show you their dividend history. So here's the thing. There was a ton of promise with these guys. 2015 was 40 cents. 2017, 41, then 42, then 45. Then it hit 50 cents. And then, boom, took a hit. So it's still down. And the trends are going up in 2020 from 2 cents to 5 cents to 8 cents to 9 cents. Hopefully, it'll start going back up. So it's sitting at 1281, 12.81%, PE ratio 8.52, and the annual dividend was 36 cents. So I bought the dip, continued to buy the dip, and went from there. I'm going to compare NLY stock with its dividend trends compared to these guys. So here's what I don't like about NLY. So here's 2013, 35 cents, then 30, and 26, and then 30. And then it dropped to 25, then 22. Really hasn't rebounded. It is cheap. It's sitting at 794, PE ratio of 4.09 with an 11.08% dividend yield. The annual dividend is 88 cents. So it took a hit. It was taking a hit before really the pandemic hit. Went from 40 cents to 35 cents. Never rebounded to 35 cents. So that's one thing that's kind of a turnoff with these guys. So 25 cents. 30 cents, 25 cents in 2019, then it hit 22 cents. So that's studying the dividends, the trends of them is not very attractive. Then I'll go to AGNC. Here's what I don't like about AGNC. Look at the decrease in dividends over time. 2015, 22 cents, 20 cents, 18 cents, 16, 12 cents. They haven't jumped up at all. They're just sitting at 12 cents. That doesn't make them attractive at all compared to IVR. IVR at least has some improvement. Okay? They have improved with their dividend. Hopefully they'll get back up there, and they're cheaper. And it's a 9.34% dividend yield, a PE ratio of 5.76, annual dividend 144. Obviously, the best mortgage-backed REIT right now is Arbor Realty Trust. So look at this, 2013, 13 cents, then 15, then 16, then 18, then 19, then 21, then 25. And it looks like you got a little bit of a special dividend right here at 15 cents, then 27, 28, 29, 30, and then it hit 36. So it has a dividend yield of 7.79% and a PE ratio of 7.8. That's the best one out there. It's 1848, annual dividend of 144. It's actually, I mean, this one has beaten the S&P in the past 5 years. So look up that symbol ABR. So I just wanted to do a quick speed run on a dividend stock analysis of IVR, comparing it to a few other stocks. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will post a video tomorrow with hot dividend stocks to buy. These have excellent dividend increases. Make sure you check that one out, and you got to hit that notification bell so you don't miss future videos. Take care and have a good night.